Hello everybody, Tortoise Investing. It's Friday. On Fridays we do portfolio update days. We've got quite a bit of movement going on in the portfolio this week. I sold out of 3 positions and I bought into 3 positions, and I'm going to explain why I did those things and how everything's looking going forward. So if you're new, please hit that like and subscribe button. Join me on this investment journey and check out some of the other videos I've got. I did do a 5 high-yielding dividend stocks you can buy and hold forever a couple days ago. So yeah, without further ado, let's go ahead and jump into today's video. Take a look at the portfolio. We're down 0.91% on the day. S&P 500 is down 1.10%. So we were beating SP there. Let's go ahead and look at the 1 week, up 1.94%. S&P beating us on the 1 week, 2.13%. The 1 month SP is down a little bit over 2%. We are down 1.92%, and year to date we are up 2.81%, and the SP 500 is up 2.42%. So we are beating it year to date, and I think that we have the formulae to beat it going forward. So this is what we're setting with. SCHD, Microsoft, Lowe's, Activision, Visa, MasterCard, SP Global, Vici, and Union Pacific. Go ahead and look at the holdings unrealized gains. Top 3, Microsoft, Activision, MasterCard. Bottom 3 is Vici, SCHD, and Union Pacific. So going forward, I'm trying to literally just have this portfolio set up to beat the SP 500. Just make it bulletproof as possible. The Activision holding, again, if you don't know, they are in the process of being bought out by Microsoft, and it should be around $95 a share. So I'm looking at about an over 20% upside on this. I'm going to be able to redistribute that cash throughout my holdings here. Now, the reason I sold out of Dollar General, McDonald's, and AMT. Hear me out. All right, so I sold out of Dollar General right before earnings because I had a feeling. I had a little bitty feeling. I got out, I think it was around 218 area, so somewhere around here, and I had a feeling that the earnings are going to come in a little rough. I called it. It has went down about 5% since then, and their guidance doesn't look all that great for the year. So I'm gonna keep my eye on it because I do like it, but until things look a little bit better on that side, it's just gonna be watching it. The other one I jumped out of is McDonald's. I jumped out of them. It's 270. The reason being, costs, just straight up costs. So what I have found is a lot of these physical goods, I'm trying to stay away from. Things that sell physical merchandise, food, stuff like that. And I'm trying to go into more just cash cows, I guess is how you could say it. But yeah, they none of these are bad stocks. It's just I got out of them. AMT, American Tower Corp, they've got so much debt. I do love the company, but I did jump out this morning. Luckily, I got out around 205. And as you can see, it's dropped on the day. I don't know what their future outlook's going to be like, but this isn't a bad... None of these are bad buy and holds. It's just, for right now, for me right now, I feel like they were better options. And let's go ahead and take a look at those. MasterCard, one of them that I got into. Free cash flow, 3.01%. It's got dividend yield's low, but the dividend yield of this is growing ridiculously fast. All of these are growing really quickly. It's got a payout ratio of 20%. Look at these. You're going to notice a trend here. If the revenue, EBITDA, free cash flow, net income, EPS, you're going to notice something here. All of those just climbing a mountain. They're going up, up, up. Return on capital employed, around 50% consistently. Love it. Visa, same story. Free cash flow yield 4.33%, payout ratio 22%. Revenue, EBITDA, free cash flow, net income, EPS, everything ticking in the right direction. And they have a return on capital employed of above 20%. Share buybacks too. I think MasterCard has not been doing that. Slowly but surely. And then lastly, Vici. I love my Vici. The thing that's different with Vici than AMT, and I regret selling out of Vici when I did, but I sold out around 36, so not all is lost. And I jumped back in around 32s. The way that their leases are set up is they increase the price of their rent according to inflation. It's not just a fixed thing. Like with AMT, their things are set in stone, and if inflation goes up, that hurts them. If anything happens with the economy, it really impacts them, where Vici has a way around that because of the way that they have their leases wrote. So I'm thinking that going forward, that these are all going to help me do my ultimate goal, and that is beat the S&P 500 into the dirt year to date. That is what I want to do. That is the main goal here. But yeah, guys, I hope you enjoyed that. Make sure to check out the channel, some of my recent uploads. I greatly appreciate it. Comment down below. I'd love to hear from you. And until next time, see yins.